Today we will be holding our 55th market research session with market research from my side, and Steph will be covering Launchpads research from his side today. I hope everyone will enjoy this meeting, and I think I can give my floor to Steph, who will cover in details Launchpads. So, Steph, go ahead.
All right. Thank you, Sava. Hey, everyone. How are you guys? GM. So, for this week's market research, let's have a deep dive on Launchpads and other early stage investment platforms. To begin with the rising adoption of cryptocurrencies and Web3 in 2024, startup projects have already raised a total of 582 million in 760 rounds from Launchpads. In this stat alone, we can already see the importance of launchpads in the life cycle of a Web3 project as they launch their TGE through public sale on these early stage platforms. On the point of view of the investors, launchpads are platforms that give access to retail to high risk reward assets and through betting on the future growth and potential of a crypto startup. But first, what are launchpads? So in simple terms, launchpads are platforms that cater to the project's public sale. This public sale could either be through IDOs, which is an initial DEX offering, IEO, initial exchange offerings, or ICOs, or initial coin offering. You might be familiar with these three common types of fundraising platforms. So let's go ahead and discuss how launchpads are distributing allocation to retail investors. Most of the launchpads existing today are utilizing a tiered systems approach. So a tiered systems approach is where investors are categorized into tiers based on their holding amount of the launchpad's native token or prior participation. So higher tiers get the larger allocations or guaranteed access. So for this example, I borrowed this example from DAO Maker. So you can see here there are different tiers. So like for tier 1, if you stake 2000 DAO, and then for tier 4, if you stake 25,000 DAO. And here in distributing allocation through a tiered system, it could also be a mix of lottery and guaranteed allocation. So lottery pools, it is a selection process where users participate for a chance to win an allocation of tokens. So the advantage of lottery pools is it provides a fair opportunity for participation, especially for smaller investors. While the disadvantage is, of course, there is high competition and there's no guarantee of receiving the tokens. And then another is the guaranteed allocation. So it could also be on a first come first serve basis. So the guaranteed allocation allows early participants to secure allocations with vesting schedules gradually distribute with the vesting schedules gradually distributing tokens over time. The advantages of guaranteed allocation is it provides certainty for investors and it discourages immediate selling. While the disadvantages is it can lead to fast sellouts and even bots manipulating the first come first serve systems. So an example here is the Polka Starter Launchpad, wherein they uh, employed a guaranteed allocations for instead of being a purely first come first serve basis Launchpad. And the last type of token distribution that we'll discuss here is the liquidity bootstrapping pool, or the LBP, and the dynamic liquidity management mechanism, or DLMM. So in an LBP setting, tokens are initially sold in a pool with a decreasing price and increasing liquidity. The popular launchpad doing this is Jord Foundry, Another similar approach is the DLMM being done by Jupyter Launchpad, where the DLMM dynamically adjusts the token price and allocation for each round of the token sale based on the market demand and supply. So the for this LBP and DLMM is it creates immediate liquidity for the token. It discourages dumping and it employs of a fairer price discovery for the token. While the disadvantages, it requires more technical expertise for the project teams and the launchpads. Moving over to the issues and concerns with Launchpads. So, with the opportunities provided by Launchpads, I included here some issues and concerns. The first being the business model of Launchpads, which is the token as an entry model, where tokens are used to gatekeep the public sale of the projects. And the concern here is with this model is when a launchpad grows in popularity with its token also rising in value, a significant amount of capital is required from the investors to acquire the launchpad token. For the investors to acquire a small allocation for the startup that they wanted to invest on. So in this situation, it could be undemocratic, with whales being able to afford the higher tiers on good allocation and retail investors being left out with only small allocations. Next is some launchpads prioritize the hype that a project could provide rather than the fundamentals. The implications of this is it creates an unhealthy speculation and false belief that projects would always launch higher than the private sale price. Given these issues, interesting developments on launchpads are the arrival of new early stage investment platforms that is introducing a more democratized way of investing with startups. And it is through an approach where they give investors access to participate in the same rounds with their VCs. And let's have a brief overview of the four projects that I placed here under this category. First on the list is Angel Block. So out of the four projects here, it's only Angel Block that has launched on its main net. So what Angel Block aims is to create a self-sufficient, permissionless network for token-based fundraising. Some some of its solutions and features includes milestone-based funding, a time-based vesting, multi-chain compatibility. It's focused on privacy as they are integrated with Aleph Zero, which is a privacy-focused blockchain, and they also have their own validator system, wherein these validators are the one that perform the due diligence on startups and oversee the voting processes to ensure the integrity of their platform. The next project is Commonwealth. Commonwealth claims to be the world's first free VC fund. Their approach is more on a community-driven approach where they provide access the community to the community in investing through a community-driven decision that is transparent and secured investment process and a fund-based investment option. So what their features are, they have this all sheet oracles. These oracles are your industry experts that refer the projects and provide valuable insights. They also have this investment fund approach where projects are listed in a specific fund, with this specific fund catering to an investment theses that allow users to diversify their portfolios. And they also have this community due diligence where users are able to participate in project evaluation through discussions, workshops, and other features that could be interesting is this advanced token selling algorithm where the token liquidation profits are distributed are to investors in stable coins and not in the form of the projects that they invested in. And another one is royalty fees, where they introduced a unique fee structure which departs from the traditional venture capital model, wherein they offer a tiered system with two components: the protocol royalty, which is a fixed 2% per year, and the profit-based royalty, which is a baseline fee of 40% on investment profits that could be reduced by staking their wealth WLTH tokens, that can reduce it to as low as 10%. And the next project is Echo XYZ is a is it's on its beta stage, and it is designed to connect experienced investors with promising early stage startups in the digital asset space. So the focus of Echo is it wants high growth potential startups in the digital asset industry, and it prioritizes adherence to the securities regulations to ensure a secure investment environment. So again, Echo is on the beta phase, and the access to the platform is limited to selected experienced investors. So I've I only got these two features from them. So the first one being collaborative approach, wherein they got this group leads that organized investors facilitate the collective investment decisions and the diversification of funds. And then they also have an integrated digital wallet service for a streamlined asset management. The last project that we would discuss is Venture Launch. So Venture Launch is a new platform built on Solana blockchain. It still haven't launched yet. So what it aims is to revolutionize seed stage investing for both startups and investors. So some of the solutions and features of Venture Launch is it also has this milestone-based investment model where investments are tied to achieve where investments are tied to achieve a specific milestone before these funds could be released to the founders. They also offer a liquid pre-market for the startup tokens, and they give access to a diverse pool of seed stage opportunities, gives comprehensive fundraising growth support, and uh, startups are also onboarded with early community for adoption. So again, venture launch not is not live on the market, so you can follow their Twitter page for further updates. All right. So as a conclusion, the crypto early stage investments could be full of opportunities for investors. And just a final word from me is to always do your own research. Look beyond the hype of a project or even the launchpad, and prepare your risk management for your early stage investments. Get to know the vesting period if there would be one, and also check the mechanisms employed by your chosen launchpad before deploying your capital. Okay, that would be it for me. I'm turning you over to Slava.
Yes, thanks very much, Steph, for presenting this article. Yeah, maybe also if you have any questions, feel free to leave them in the chat. We'll be answering them maybe later after my
Right.
presentation as well. Maybe I had some also questions to you, Steph. What do you personally think out of these four platforms, the foremost, what is the most promising one, and which one is excites you the most right now?
For me, it's quite hard, especially when three of the four projects that I listed here has not launched yet. But I'm actually excited about Commonwealth, especially, and Venture Launch, which is on Solana. I think for Commonwealth, it's quite interesting for them to have those projects to be part of a specific fund, and investors are investing on that fund, and they could vote on the projects that would represent that specific fund that they want to invest on. So I think it's a interesting structure. It's a that could probably shape up the future of early stage investments. And as for venture launch, what I like about its feature is the milestone based investment model, where the funds the funds that are allocated for the investment would only be released to the founders, to the startup, as soon as they reach a specific milestone. So I think it would be a fair model, both for the investors and to the startups as well.
Yeah, that makes sense. Yes, thank you very much, Steph. I think we can then go to my presentation. Today we'll be discussing a bit the state of the market, especially the Bitcoin. I think we everybody have seen that this a new height which
Right.
recently has been. So let's me share my screen and let's discuss it. Give me 1 second. Yeah, so let's start, and let's at first, to start with, I think the great point where we can start is the supply over last years, and there is a great graph from Glassnode which shows a supply of active tokens for each year. So as we can see here, more than 60% of tokens were not active in the market for over a year. And to be honest, right now, in this bull run which we had seen, the majority of tokens on Bitcoin, of coins of Bitcoins weren't moving at all. So there is less than a third of whole liquidity, which is basically in circulating supply currently, and we see a lot of basically supply being left on wallets before, and more than half of whole tokens were not moving over 2 years. So as you can understand, the majority of tokens of holders are long time or mid-term holders, and short-term holders on Bitcoin are basically at some disadvantage because there is not a lot of people who are moving this. And the next metric at which we can look is basically a long-term holder spending. How much bitcoins were moved and sold by long-term holders, and we see like the largest drop for a long time. Almost 1 million bitcoins were sold by long-term holders in half a year almost. And we see this basically like raise and then drop in liquidity in the markets. And right now, we in the moment basically where this selling pressure were eased, and right now it started to stabilize. So a long-term holder started again to hold, and majority of assets basically are still locked on wallets of majority of people, and no one is planning on selling right now. Everyone again started to buying basically and just holding them. That's what started to happen. And we had seen that after, for instance, ETF was we had a Bitcoin ETF. A lot of long-term holders, some amount of them, started to sell their tokens. But right now, people again started basically to gather the positions and continue their hold. The next point which we can discuss is basically the threshold at which long-term holders and short-term holders are entering the market. And right now we see that basically the majority of people started to enter a basically short time holder realm, and more people started to buy for short time holding because we had seen this rise. Of course, a lot of people bought Bitcoin due to ETF approval, and basically there is more people became short-term holders just because they recently bought the Bitcoin. And as we previously discussed, around 1 million Bitcoin were sold by long-term holders after the ETF approval. However, the demand from short-term holders and newcomers to the market overwhelmed. I think there is a graph also from Glassnode which they shared, and there was an interesting data about the average volume of transactions on Coinbase, and I believe it was around more than 10 BTC on Coinbase, so it was much higher than on each exchange. Higher because basically the Coinbase is the only gateway for United States audience and buyers to enter the market, and also a lot of ETFs started to buy through Coinbase. That's were interesting, and as we see a lot, and at the same time a lot of people were selling through Coinbase, and that's what we have seen basically, and that's the current trend which happened basically. The next also metric in this report, Glassnode showed a lot of like more unique metrics, and this liveliness metrics captures a change in the market and indicates that the Bitcoin network is seeing a greater volume of coin day creation than basically destruction. In other words, it's that the market is expressing a greater preference for holding coins for longer periods of time at this point, rather than actively distributing coins for profit. So people just trying to fixate their position, basically to hold their position, and then turn them into profit, and less people are selling their tokens at this point than it was before. Let's also discuss and review the demand side. So basically right now there is a realized capitalization metric. It is more unique to on-chain analysis, and it basically measures the cumulative dollar liquidity stored within the assets. And right now it raised to more than $500 billion, so it's almost $600 billion. And currently, the rate at which new capital is flowing to Bitcoin has drastically slowed down. So on the peak after ETF approval, it was more than $3 billion per day inflows into Bitcoin, and it's basically went again from the peak. And right now we see a fall from the date, and basically it's shows that market slowed down, and the activity right now is lower than it was. However, it's still there, and we have everyone seen this. And I believe it's connected with also Ethereum ETF, which is coming today. I think it's the biggest news of the day will be. However, it's also an interesting topic, I think, which we can discuss next week. The influence which it will have, because I believe it's one of basically there is Bitcoin ETF and an Ethereum ETF. Yet there is more legal clashes with Ethereum because due to it being proof of stake, not a proof of work, there is some legal questions regarding it and how SEC visions it. However, I believe we will see an interesting decision, because basically, how they say, what was the reason of the last this short rise? It was that one Bloomberg analyst predicted and simplified that this basically a decision for Ethereum ETF will come in 75% approval rate, basically, and due to some feedback which he received. So that's what we are waiting for today. Everyone is waiting for approval of Ethereum ETF. So let's also take a look at net realized profit or loss for Bitcoin, and basically the rate at which the realized capitalization is changes every day uh, shows the capital inflows for us. And right now we see that basically recent influx of liquidity, what I said, more than $3 billion per day was influx in the market. It was the all-time high at this moment on the market. And basically this surpassed the peak of 2021, as everyone knows. And currently this metric remains positive. And basically, however, right now it's declining, and we see that sell side headwinds from other investors are coming. So there is some uncertainty in the market. However, at some other metrics, we will see that the market right now is consolidates, and basically that's what I wanted to speak about is volatility compression. Basically, it shows how much. So basically, if so, it's this yellow graph, and it shows if there is high values for it. It shows that investors are selling actively, buying actively, and basically it shows that market is it's hard to find equilibrium on the market, and people are basically spending coins everywhere. There is a lot of on-chain activity, etc. When it's low, basically it shows that equilibrium on the market is reached, and demand side and sell side are close to each other. There is no major liquidity events can be predicted, I think, and basically that signifies exhaustion and of profit and loss within the current price range. That's basically what it means. And right now we see that it's going down, and when it's going down, we see usually just straight movements without any volatility events. And I think that's what might happen. I think the only event what might change it is Ethereum ETF approval, but it's still debatable because part of me still understands that there is a lot of companies which who already holds large sums of Ethereum, and it's really interesting how a lot of people earn when basically ETF are approved, and they're just selling it on lower prices than markets. Because right now, for instance, there is, I think, the biggest holder, one of the biggest holders of Ethereum. I just forgot the company's name. It just went straight out of my mind. But they hold around $20 billion in Ethereum. They had its own ETF on Bitcoin as well, and they had sold the majority of their portfolio after the ETF was approved. And a lot of analysts predict that the same will happen after Ethereum ETF will be approved. So they will just realize their profits, and the average buying price for their Ethereum was around $2,500. So you understand that it's like 40% less than now, and they will have just high returns on their portfolio. But yeah, that's just a little bit about Ethereum. Let's return to Bitcoin and what is happening right now. And that's also an interesting graph, which shows basically a 60-day price high and lows. And basically, that's where we can see some significant volatility also events. And basically, we can also assess this market volatility by measuring the percentage range between the highest and the lowest price over 60 days. And by this metric, volatility continues to compress to levels typically seen after lengthy consolidations and prior to large market moves. That's how we can see it. And right now it's on really low level. So market currently is it's taking its position, and we believe consolidates. And there is also, I think, one of the last graphs which we'll discuss today. It's close to to those which we have seen. That's unrealized priced distribution, basically. And right now, the majority of whole bitcoins were bought, acquired at lower price than the spot price. Only 1% is higher than the spot price. And if you will think about it, that says that there will be a lot of selling pressure. But as I said previously, there is more than 60% of whole Bitcoins supply being inactive for more than a year. There is a third of supply which is inactive for more than 5 years. And there is a great chance, as we know, also there is around 3 million bitcoins which are lost, etc. And it can relate to these topics, but there is still a big selling potential for Bitcoin, and it shows that people are just storing it for future and hoping for the best. And that's basically what is happening currently in the market. And I think the final conclusion can be, we can just review the short-term holder supply. And right now, basically, it's grew with the approval of ETF, and it was on its original height. But right now it started to fall, and short-time holders have around 3 million of bitcoins. It's significant amount, but it's puts it at around 15% of whole supply. And if we reviewed what we reviewed before, there is only like 30% of supply which is active. So we understand that right now a bit more than 30% of supply is active, and short-term holders basically have less than half of it. And we see that there is a lot of demand on the Bitcoin still. So overall, that's an interesting situation currently with the market. I believe it mainly consolidates for the summer. As we know, the summer there is no active price changes due to a lot of liquidity being basically on the holidays. People are not really that involved in the market as they were before. And right now, I think that's the period where we're going. However, I think this summer will be really active in DeFi, especially in layer 2s. There is a lot of upcoming news, which we'll definitely discuss in next weeks. I think there is a lot of news which needed to be discussed here on the market research. And yeah, I think that's it from my side. So let us know if you have any questions in the chat. Also, Steph, do you? Yeah. So I think let's maybe wait a couple of minutes for any questions which may pop up. Yeah. What do you personally think about this? Basically, the rise of the markets after the news on Bloomberg. how they say it? Do you believe that it was because of this whispering, basically, before?
For me, I think for the short term, we could see some downside potential if we would remember what happened when the Bitcoin ETF was approved and it first launched on the stock exchange. Grayscale, we also saw some major outflows from Grayscale,
Yeah.
and this
Yeah.
could be very similar with what uh, it with what the Ethereum ETF approval could be, as Grayscale also has the Ethereum Trust.
Yeah, and I believe they have even larger Ethereum trust than they have a Bitcoin trust. So it's on higher
Mm-hmm.
evaluation at all. So and that's what I was speaking about. They have like around, so average buying price of Ethereum in their trust is around
Mm-hmm.
$2,000, and it's so today's price, we know today's price is it's around 40% higher than it. And basically they will be selling it in huge upsides for them. Also, they have a large chunk of their portfolio which were bought like at less than 1,600 $600. So they were entering the market at the time. They were buying Bitcoin for a long time, and they sold half of their trust on Bitcoin. Basically, they right now just having a basically free half, because basically it's returned all their investments in several times. Uh, so it's interesting, and I believe that if ETF will be approved, we will see some downside in the market, because as we had seen with Bitcoin ETF, price form will already shown before the ETF comes, but then larger players will start selling to retail buyers, and that's I think what might happen here
Yep.
as well.
Agree on that.
So yeah, that's it I think for today. I haven't seen any messages in the chat, so yeah,
Yep.
was pleasure holding this market research this week. Uh, I wish everyone to have a great day.
Have a great day, everyone.
Yeah, and see you in 2 weeks. Yeah, bye.